Abhyuday Jindal, the Vice Chairman of the company, has joined us now. Mr. Jindal, thank you very much for joining us. Well, can you tell us a little about this order? What is the size and exactly what will you be supplying?
So this is basically a strategic material we have developed in conjunction with DMRL. The size is still to be worked out. There are many potential applications which will go into infantry combat vehicles, as for example, mine protective vehicles, mine trawl vehicles. So currently we see a potential of about 15,000 to 20,000 tons. But with application and the material passing various testing, the potential will only increase.
Mr. Jindal, so that's a very small part, I think, of your total production. It'll be less than 5% of your total production, if I get that number right. But what is the total potential? I mean, going ahead, do you see you doubling this capacity from 20,000 to around 40,000? What kind of margins do defense orders enjoy? Is it better than what you're doing now, 11.5%, 12%?
So definitely we see margins being better in the defense segment. And the potential will increase. Like I said, right now we're still in, this is the first phase, and we will see as the applications increase and we work closely with the Defense Ministry, potential is almost going to be 30,000 to 40,000 tons in the next 3 to 5 years. And we also see a big investment coming in as we go on further. But right now we want to leverage our potential that we have at our Hisar unit to produce this grade.
Okay. You're getting the live visuals of the IPO launch of DMart. That's a much awaited retail store offering. And we have seen the Future Network shares, jumping up after the DMart listing got closer. Sorry, the DMart offer for sale got closer. It's an IPO, an initial public offer. We'll, of course, analyze the DMart financials in a bit. For the moment, we're continuing our conversation with Abhyuday Jindal. Abhyuday, if you can tell us what is the volume in FY17 vis-a-vis FY16, or even a quarterly breakup. It appears that 2016 volumes have genuinely picked up for steel companies.
Yes, steel sector has seen an upswing again now. And volumes we are planning to increase this year by almost 10 to 15% over last financial year.
Okay, is there no Chinese dumping issues anymore? Does that still pressure prices?
No, there definitely still is, but we are working internally on lowering our costs and improving our production so that we can compete better with the Chinese makers. But there is still a lot of imports coming in from China.
All right, Mr. Jindal, if you could give us some details, then I think your current capacity is 7.5 to around 8 lakh tons. If you could break up it for us, how much of it is your specialized stainless steel, how much of it is cold rolled coil, and how much is the normal stainless steel? And what kind of capacity utilization levels are you functioning at currently?
So currently we are at 100% capacity utilization. As I can say, the special steel segment like nuclear, blade steel, coin blanks is only about 10 to 15% currently. The balance 80 to 85% is our normal homogeneous stainless steel. But as I'm saying that with a push in the defense segment, we are trying to increase the volumes in the special steel segment compared to our homogeneous stainless steel, which will be supplied from our other plant, which is in Jajpur, Odisha.
Okay. Well, nickel prices were rising in 2016, are plateauing now. What does all this mean to your margins for the full year, FY17? And how will your margins likely pan out next year? Are you getting a sense you'll be able to maintain them?
So nickel prices have been rising, and I believe that they will rise with all the movement happening in the mine closures in Philippines and mines in Indonesia as well. But margins we feel will still be at about 12 to 15% for the current year.
All right, Mr. Jindal, now the other big problem has been the debt. I'm just looking at it. Your finance costs are around 100 crores per quarter. So that could be an annualized 400 crores. What's the current debt in your books? What are the plans to reduce the debt from current levels?
So I mean, we are working on it as we speak as well, and debt should reduce a significant amount this year with stainless steel again picking up. The exact numbers I will have to get back to you. I'm not involved directly with that, but full focus is on reducing debt.
Are you looking at some strategic partnership, financial partnership, private equity, equity infusion?
Not at the moment. I can't say that we are. We are trying to work out everything in-house, so we're not looking at any strategic partners or private equity at the moment.
Nor any debt recast from the banks?
I mean, the JSHL is almost out of CDR now, so we're not looking at any debt recast as well.
All right, Mr. Jindal, you know, just very quickly, we rarely get to talk to you, so I need to ask you this question. The listed company, that's Jindal Stainless Hisar, they have what, 74% stake in Jindal Lifestyle. Any plans over there? I mean, if you could get a brief valuation on what does that mean for all your shareholders?
On JSL Lifestyle is the specific question?
Yes.
I'm sorry, so it is a subsidiary of ours. I mean, there is no, as such, we are looking to further expand JSL Lifestyle as well. We're getting into kitchens and into metros as well.
Right. What kind of
So,
revenues have you
there
been
is-
doing over there? Is it profitable? Will you be looking to list it? You know, will you be looking to unlock some value? Those are the questions we're putting forward to you, sir.
So I think the plans are there to list it on the stock exchange.
Okay.
And there is, we almost earn about 80 to 100 crores EBITDA we get from JSL Lifestyle. So there is good potential I see in that.
Okay, that's quite a bit, giving competition for your steel sector, I must say. Thank you very much, Abhyuday Jindal, for joining us with all those details. We have to take a quick break. We are coming back with more on